Hi, Mark Anderson here, mortgage banker at Paramount Bank. I am licensed to lend in all 50 states, so I would love the opportunity to work with you. In today's rate update, we're going to keep things short. Rates are slightly higher today than they were yesterday. And the picture of the bond market right now is expressed in this graph here. Shows you that we had a strong start to the day at levels that were already actually a little bit worse than where the bond market closed yesterday, and we've seen those bond prices fall. So as bond prices fall, that's going to put upward pressure on the interest rates. As far as nationwide reports of what lenders are doing with their pricing in real time today, my chart here says we've got 27 nationwide lenders that have increased their rates from the initial published rates from the start of the day, and we have exactly 0 lenders that have issued better pricing than what their original rate sheets indicated. So to put this into context, at the beginning of the week, we had a lot of optimism due to what the Fed did. I have explained that the Fed does not control the mortgage rate knobs, but they did do this quantitative easing program, which it looked like the bond market was very happy about. There were some modest gains in the bond market that caused the pricing to get a little bit better. We have seen those gains pretty much completely erode as the week has gone on until today. One of the things I read about this morning is that the amount that the Fed is purchasing through this quantitative easing programs, the amount of bonds that they're purchasing versus the actual volume of business in the industry, it's maybe the case that they're not buying enough for that to be a truly sustaining positive impact on bond prices in a way that's going to keep these rates low. So far, the quantitative easing program, I think there are some folks that maybe were a little over-optimistic about how that would impact mortgage pricing overall. Big picture-wise, we are still at very, very low rates. If at the time of best pricing, I said something to the effect of 99% of people that have a mortgage should seriously take a look at refinancing. At the very lowest points, 99% of people should look at refinancing. I'd say we're maybe down to 85% of people can seriously benefit from refinancing, depending on what their rate is right now. I'll make kind of I tend to avoid rules of thumb, but I'm just going to say if your rate has a 4 in front of it, it really makes sense for you to take a look at what you can do to reduce that rate. That's my basic recommendation today. Again, we're slightly higher today. It's not a huge increase by any means. This is an ever-changing environment, and tomorrow could bring something entirely different. I'm hoping that we'll see some price improvements, but certainly the risk-averse move, as I always say, is if you can save money now, save the money now, or at least get your application in the door. So I'd be more than happy to take a look at your scenario in detail, give you some transparent information in the form of a refinance proposal. You can reach me anytime at the number below. Thank you.